I am AI Avatar of CA Ratan Mundra. The Reserve Bank of India has issued new directions governing interest rates on advances for urban cooperative banks. These directions come into force immediately and replace all earlier instructions on the subject. The objective is to ensure transparency, fairness, and responsible pricing of loans. In this video, we break down what has changed and how existing banks should implement it. These directions apply to all urban cooperative banks as defined under the Banking Regulation Act. They are issued using RBI's statutory powers and are fully binding. Every UCB, regardless of size, must align its lending practices with these rules. Non-compliance can invite supervisory action. RBI allows banks to determine their own lending rates subject to board approval. Rates must reflect cost of funds, transaction costs, and risk premiums. However, excessive or usurious interest rates are clearly discouraged. Boards must put internal checks to ensure fair pricing. Transparency is a key pillar of these directions. Banks must publish both minimum and maximum lending rates. This information must be clearly displayed in every branch. Customers should be fully aware of the interest rate structure before borrowing. All advances must now carry interest charged at monthly rests. This standardizes interest calculation across banks and products. However, agricultural advances are treated differently. Banks may continue existing crop-linked interest practices for agriculture. For agricultural loans, RBI allows flexibility. Long-duration crops can attract interest at annual rests. Short-duration crops and allied activities may follow repayment-linked cycles. This ensures borrower-friendly treatment aligned with farm cash flows. For small value and personal loans, RBI stresses responsible lending. Banks must assess borrower cash flows before sanctioning loans. Interest rates should reflect borrower risk and available security. Overall cost must be reasonable and defensible. Banks are encouraged to set internal ceilings on interest and charges. These limits must be clearly communicated to customers. The goal is to protect small and vulnerable borrowers. Unreasonable pricing can attract regulatory scrutiny. For small and marginal farmers, RBI provides a critical safeguard. Total interest debited cannot exceed the principal amount. This applies to short-term agricultural advances. It prevents debt escalation and borrower distress. Microfinance loans require a dedicated, board-approved pricing policy. Banks must clearly document how interest rates are calculated. Each component, cost, risk, margin, must be identifiable. A clear ceiling on interest and charges is mandatory. RBI has clearly stated that microfinance pricing must not be excessive. Interest rates and charges will be closely monitored. Any signs of exploitative pricing can invite supervisory action. Consumer protection remains central to RBI's approach. Existing UCBs will need to review their current loan portfolios. Interest computation systems must support monthly rests. Loan pricing frameworks may need recalibration. Branch-level disclosures must also be updated immediately. Existing borrowers benefit from increased transparency. Interest calculation may change due to monthly rests. However, pricing must remain fair and justified. Overall, borrower protection is strengthened. Banks should begin by updating board-approved lending policies. Loan management systems must align with monthly rest requirements. Staff training is critical to ensure consistent implementation. Clear internal communication will prevent compliance gaps. All earlier RBI directions on interest rates for UCBs are now repealed. However, actions already taken under earlier rules remain valid. This ensures regulatory continuity without disruption. The new directions now fully govern future operations. These directions give banks flexibility, but with accountability. Transparent pricing and fair lending are no longer optional. Strong board oversight is essential. Early and proactive compliance will reduce regulatory risk. Munses and Management Consultants LLP, a trusted partner for SSZ and IFSC excellence. A pioneer in establishing SSZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances. Risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations. And fintech, expertise in customs, clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.